What are the biggest challenges for impact investing in Latin America?
Well, first, thank you. I would say that it's different. It's very difficult to say in one piece what are the challenges for the entire region, because different countries are at different stages of development in terms of the impact investing industry. However, it's quite easy to identify a few challenges that are across countries in Latin America and perhaps in other countries at different levels of the deal making of the impact investing business. To start, I would say that on the fundraising side, one of the greatest difficulties is that many funds have sourced their funding from European or American investors, or in some cases from Asian investors, but very rarely Latin American investors are entering the funds, especially when there are global funds. And that clearly lacks an anchor in the region to push for certain catalytic changes that need to happen. On the fundraising side, other thing that it's important to mention, and I believe that many other practitioners are emphasizing, is the important to have a boost from the government, either to have government-backed funds to accelerate certain sectors, or to have the government accompanying certain funds in terms of guarantees or first lost kind of pieces or tranches of the funds and things like that. So I would say those are the challenges at the fundraising level. I would say on the structuring side, there are also difficulties for funds that want to operate in Latin America, and I think that many experts have commented on it, on the importance of having appropriate frameworks for the development of the industry in Latin America, meaning things like the taxes. Not only taxes that incentivize investments would be great, but also tax breaks that allow investors to invest, and they invest from the companies in the emerging markets, or especially in Latin America, without having to face the same kind of regulation that other investors do. Because otherwise, it's just the field is not fully leveled yet. At the level of the sourcing, in many countries we are seeing a little bit of an excess of funding vis-a-vis good deals. I wouldn't say that there are not many investment-ready opportunities. Many opportunities still need to be prepared, and the investors in many cases have to do a little bit of hand-holding to accompany them through the investment process or through the due diligence analysis, and that's a big constraint and challenge for the industry. Another point that is relevant is the size of the tickets. And for funds like Bamboo Finance that are willing to bring capital from the traditional capital markets, if you don't see deal sizes increasing, it's going to be very hard to scale the industry. And finally, on the sourcing side, and in complement to what I was saying about investment readiness, is the fact that many companies are still early and need other kind of investors different to what a Bamboo Finance can do. Maybe angel investors or seed investors who can take them to the venture capital stage, and those venture capital deals will be maybe ready for a private equity fund later on. Those are maybe on the source. So to continue on the process of the due diligence of the investments, it's also very evident that analyzing an impact investing deal is not any different than analyzing any other kind of investment in the private equity world. It takes you the same amount of time to do a 2 million deal than it takes you to do a 100 million deal in many cases. And in some cases, those impact investing deals require additional resources to be analyzed, either because of the additional filters that we put in place to understand the impact at the level of the social or the environmental level, or because we need to go further to satisfy our investors' requirements. And finally, but very importantly, on the valuation side, one big challenge that the industry faces is the coexistence of many different types of investors, philanthropic, venture capitalists, private equity, going after very similar deals. And many of these companies have been valued at very high valuations by philanthropic investors because they value their social impact. But when it comes to be invested by a more commercial investor who also has the impact view and lenses, it becomes very difficult for that company to fundraise.
What are the current mechanisms for impact investing in Latin America?
If I recall well, the World Economic Forum, based on the figures from JP Morgan and the Monetary Institute, has recollected from the interviews they did that most of the impact investors are operating in the equity business. Majority of them are also operating on the debt side, on the debt segment, and a few ones are working on equity that is or debt that is quasi-equity, and a very few ones, maybe less than 20%, are using other kind of instruments like grants or cash facilities or other type of financial instruments to boost the industry. And I certainly believe that the sector needs a lot of innovation and needs the impact investors to take a role that is more comprehensive and that tries to cater for the needs of the investees at a more broad basis and not only equity. So that's an area that we are deeply studying at Bamboo Finance and trying to see how we can respond to that need.
What can an investor expect as a return from a project?
So I will say that on that question, the most important thing is to define who is the investor we are talking about, because certainly the profile of such investor will determine the kind of projects that the fund will invest in and the risk profile return that it will be aiming for, and therefore the impact. I will say that there are projects in our industry and there are companies in our industry that can provide returns above the 20% IRR or over 2 times book like valuation. However, there are many others that are more nascent or maybe more early, or perhaps are prioritizing the impact over the commercialization of the product or the service, and therefore have a lower level of returns. In Bamboo, we are aiming for commercial returns in our current funds, but we realize that there are other investment opportunities that might need for lower returns targets.
Okay.